Cathie Wood, an avid admirer of Tesla and Elon Musk, recently made headlines by revealing shocking information about the company and the electric vehicle market. Investing in emerging technologies like autonomous vehicles and genomics, she has built ARK Invest into a $60 billion corporation. Wood is a staunch supporter of Elon Musk and believes that Tesla might be worth more than $3 trillion in the future. However, investors have been a bit dubious recently due to the decline in stock prices following Tesla's postponement announcement of new models. Where does she stand on the future of the electric car industry? Within the next 5 years, where does she see Tesla? How might this affect the price of Tesla shares? You'll have to watch to find out. The carmaker and energy conglomerate Tesla Incorporated has had a tumultuous start to the year, with stock prices falling from $1,236 in November 2021 to a high of $922.43 on February 16th, after first falling by 5.33%. The recent declines in tech stocks have created buying opportunities, according to experts. Wood remarked in an interview that there has been a trend toward electric vehicles, and the data seems to support this. Bloomberg New Energy Finance reports that by the middle of 2021, battery electric and plug-in hybrid electric vehicles had increased their share of the global auto market from 2.6% in 2019 to 4.3% in 2020. Sales of electric vehicles made up only 3% of the total in the first half of the year in North America, but experts believe that number will grow to 5% as the year progresses. In addition to the vow by GM, Ford, and other automakers to make all new car sales zero emission by 2040, increased sales of electric vehicles were also announced. Woods mentioned in the interview that the sudden surge in these electric vehicle makers' stock prices may be indicative of rising demand exceeding supply. Even if shares of GM and Ford have climbed this year on the back of their electrification initiatives, the legacy automakers aren't used to producing electric vehicles because they were founded during the era of the internal combustion engine. Wood claims that rising customer demand, increased car availability, and government support will result in a dramatic increase in sales of electric vehicles and charging point infrastructure in 2020. The total amount paid by consumers on EVs was $120 billion. This is a 50% increase from 2019 levels. Sales are up 41%, and prices are up 6% as a result of this. According to Woods, Tesla is years ahead of the competition and will continue to dominate the electric vehicle market because of the decisions it has made in terms of its technology. GM plans to spend $6.6 billion in its home state of Michigan between now and 2024 to increase manufacture of electric pickup trucks and build a new battery cell plant for electric vehicles. GM plans to raise its investment in order to meet its goal of producing 1 million electrified vehicles in North America by 2025. By the middle of the next decade, General Motors plans to have sold more than 1 million electric vehicles worldwide, making it the largest seller of electric vehicles in the United States ahead of Tesla. It will take some time for other automakers like Hyundai and Ford to catch up, but they won't be far behind. Tesla is unique for a number of reasons, not the least of which is that it was an early player in the electric vehicle market. Since Tesla's batteries are often considered to be superior to those of its competitors, the company's battery distribution network is an important part of the company's competitive edge. Why? The excellent caliber of Panasonic's battery cells plays a role. Plus, Tesla is always refining their battery packs and chemistry to make them better. About 74% of all EVs sold in the US over the previous 3 years have been Teslas. Depending on the model, its automobiles may go greater distances. Maximum Model S Tesla range is 412 miles. The only non-luxury vehicle that comes close is Ford's Mustang Mach-E with extended range. Next up is the Tesla Model 3, then the Model X, since electric vehicle models account for only 2% to 3% of revenue for most automakers. Wood commented that it would take long for other OEMs to catch up to Tesla's speed, and a total redesign would be required to boost those figures. Spending energy and manpower on this is not an option. Meanwhile, sales and innovation at Tesla keep climbing. We are beginning to feel that Tesla will not only take the largest proportion of the electric vehicle industry, but also that it might grab 20 to 25% of the whole auto market in 5 years, provided that Tesla is the first to achieve success in autonomous vehicles in the United States. Wood predicts that by 2025, Tesla's stock, which is presently trading at $1,089, she has faith in Tesla's self-driving technology. She thinks the single most important factor in pushing Tesla shares to her $3,000 goal is surviving attempts, which have a 50% chance of success. She thinks that in the future, design will be less essential than the vehicle's ability to convey people to their destinations thanks to autonomous vehicles operating in autonomous taxi networks. We anticipate that the price of electric vehicles will eventually drop below that of gasoline-powered automobiles, and that trend will continue, Wood said. By 2026, the average cost of an electric vehicle is projected to be about $15,000. In response to a listener's question, Wood said that electric vehicle competitors Lucid Group, Rivian Automotive, and others do not pose a danger to Tesla. She acknowledges that firms in this space can be successful, but she rates Tesla's battery technology as 3 to 4 years ahead of the competition. She also notes that Tesla might stand out in the market because it is developing driverless vehicles while the other two are not. Wood also questioned Tesla's crisis response time during the chip shortage. For most of 2016, Tesla was in a different scenario than established automakers like General Motors and Ford Motor Company due to a lack of computer processors. Car prices skyrocketed when General Motors and Ford shut down their factories one by one, often for months at a time. Regardless, Tesla consistently outpaced its own sales projections, selling roughly twice as many cars in 2019 as it did in 2020. Despite the widespread recession, Tesla will follow Apple's lead and earn the lion's share of profits in the electric car market. Because Intel and Qualcomm were favoring the volume players, Nokia, Ericsson, and Motorola, Apple was forced to develop its own chip, as predicted by Cathie Wood. Despite the dip in its share price, the value of Tesla has increased, as predicted by the investment guru in a previous interview, because the company built its own chip for use in mobile devices. Rather than a car manufacturer, Tesla is seen by many analysts and investors as a technological company. At least, that's how they justified the more than 300% increase in stock price beginning in 2013 for the company. Tesla and the technology industry have many things in common. Tesla has taken on board the disruptive mantra of the tech sector. Like other tech firms, Tesla is trying to upend the vehicle sector by going straight to the customer. Its product roadmap and creator enjoy a level of fan devotion usually reserved for much larger, more established tech companies like Apple. Stocks of technology companies like Tesla were hit hard by rising bond yields and anticipation of Federal Reserve interest rate hikes from January 3rd through the 27th, but the price has since recovered by more than 11%. Wood emphasized the need of looking at our investments in the long run when giving a presentation. We're considering the long-term strategy. Never before have I seen an invitation extended at this level. To begin, many industry watchers see 2022 as a banner year for Tesla. One Goldman Sachs analyst, for instance, has issued a bullish commentary on the company, calling it the undisputed market leader, with a $1,200 price objective and a buy recommendation. Wedbush Securities' Daniel Ives is also optimistic, predicting a price of $1,300 and a best bull case scenario of $1,800. According to Wedbush, Tesla has successfully navigated the chip bottleneck in 2021, and there is still market share to be absorbed by electric vehicles. The performance of Tesla stock in 2022 will be affected by how various positive and negative factors play out. It's possible that Elon Musk will have to pause his stock sales and devote more energy to the launch of Cybertruck. The Chinese market is a major one for Tesla and other electric car manufacturers. It is predicted that in 2022, China would be responsible for 40% of Tesla's deliveries, adding nearly $400 to the stock price of the company. A well-managed Chinese market might be a major boon for Tesla. If Tesla's plan in China pays well, analysts predict the business will reach new heights in 2022. Do you share Cathie Wood's viewpoint? Can we expect Tesla to corner the market for electric vehicles? Could Tesla replace Apple? Leave a comment below.